Hello, welcome back. Hello, you're welcome back. In this module, we're going to be looking at candlesticks. We're going to be looking at candlesticks. Now, for every beginner in this market, you need to understand candlesticks. Okay, that is actually the foundation for every other thing you are going to be learning, you are going to be doing in the market. You will have to have a basic understanding of candlesticks. Okay, now when we talk about candlesticks, we are actually talking about the language of financial market. Okay, candlesticks basically speaks what is actually going on in the market. When you really want to understand what is really going on in the market, what is it that people in the markets are doing, participants in the markets are doing, basically you have to look into your candlesticks. Every field has their own languages, right? I'm a music person actually, and there's something we call music score. Okay, when you open a music score, that score is actually telling you something. Now, if you are knowledgeable, if you have that skill to interpret what that music score is telling you, you can actually interpret what that music piece is actually doing, even though you don't see the composer. Even if you have not heard the song before, you can always interpret what that music score is actually saying. The same thing happens in financial markets. When you understand candlesticks, when you understand the language of that market, which is actually the candlesticks, you are well on your way. Okay, you're on your way to acquiring the right skill set for you to be profitable in this market. All right. So candlesticks are basically visual representation of what's going on in the market. Now, before I move on, there are two major sets of participants in this market. Basic, basic participants in this market, and they are the buyers and the sellers. There are, people buying, there are people selling, or you can say there are institutions buying and there are institutions, that are selling in that market. Now, when you open up a chart will actually tell you who amongst these set of people are dominant, which side of these um, participants are the buyers dominant in the market, are the sellers dominant in the market. When you open your chart will actually tell you that. Now, by looking at a candlestick, we get valuable information about the price. Okay? Because when we talk about trading financial market, it is basically revolving around around prices, around the movement of price, around what those big institutions, what are they doing? When I said some people are buying, some people are selling, at what price do they bid? At what price? What's the asking price? What's the bid price? Who is actually if anybody wants to sell something, there has to be a buyer, right? If somebody is actually buying, there has to be a seller. You understand? So basically, a candlestick is actually telling you that within a period of time that we are looking at, what is the opening price? What is the highest price that that instrument was bidded, what was the lowest, and what is the close of price. Okay, now when you look at a candlestick will give you that information. All right, so just before we move on, just before we begin to break down the concept of candlesticks, now when you open up a chart, you are going to see something like this. Look at this: M1, M5, M15, M30, H1, H4, D1, W1, MN. Now, these M1, M5, M15, M30, those M there is talking about minutes, okay? Now, M1 simply says 1 minute. It means that if I click that particular place, I click that M1, it means that all the candlesticks I'm going to be seeing on that chart, it means that it takes 1 minute for each of that candlestick to be formed. So it let's say for example we are on 1 minute candlestick, 1 minute chart. It means that this particular candlestick here takes 1 minute to be formed. It means that this second one will take another minute to be formed. This one takes another minute, another 1 minute to be formed. So if we now move on to M5, which is actually 5 minute chart, it means that each candle on that chart takes 5 minutes to be formed. If I click M15, it means that every candlestick on that 15-minute chart takes 15 minutes to be formed. Each one of them. Each one of them. So also it is with all of these. So if I click monthly, sorry for that. So if I click monthly, that is MN here. It means that every candlestick on that particular chart takes a whole month to be formed. Each candle, one candle on that chart takes a whole month, okay, to be formed. If we are looking at W1, W1 is weekly, okay. It's talking about weekly charts. D1 is talking about daily charts, and H4 is talking about 4 hourly charts, and H1 is talking about hourly charts. So if you're dealing with H4, for example, it means that every every candlestick you see on that particular chart takes 4 hours, takes 4 hours to be formed. So it means that if you're looking at this, this is, if this is H4, that is 4 hourly chart, it means that this candle takes this one candle takes 4 hours to be formed. Then once that 4 hour elapses, then this one also also open. So it means that this one also takes 4 hours to be formed. Then it moved on. This one takes 4 hours to be formed. Then after this one takes 4 hours to be formed. I hope you understand that concept. So depending on the chart you are on, if you are on daily chart, it means that every single candle on that particular chart takes a whole day to be formed. It's going to be telling you exactly what happened during that particular day, during that particular session. All right, so let's quickly move on. Being that, so what's the candlestick? Like we rightly said the other time, that candlesticks has 4 major components: the opening price, the eye. Of course, you talk with the eye. That's actually talking about the highest price within the given period. Then the number three component is the low. That is the lowest price within the given period. And of course, the price also has to, has a closing price. So those are the 4 components of every candlestick. So certainly I'm going to be showing you how to really read that. Okay. Now, let's quickly look at this concept of bullish candlesticks. Okay. Now, when you say a candlestick is bullish, you are saying that the close price is higher than the opening price. You know, we were saying that the close price is higher than the open price. So let's say, for example, let's use let's use dollar for example. Let's say within a 5 minute, you are looking at a 5 minute chart, for example. It means that that 5 minute chart is going to tell you what buyers and sellers are actually what they did within that particular time frame, within the 5 minute time frame. You know, let's say for example, this particular session starts at 10 10 a.m. for example. So between 10 a.m. and 10:05, we want to see the chart is going to tell you what the buyers and sellers actually did. Now, if the if for example the opening price in that session at 10 o'clock is like $1, and by 10:04 that session is about to close, and you are having the closing price at $5. You know, the closing price for that session is actually what? $5, while your opening price is $1. Now, your candlestick is going to give you that information. It means that that candlestick is what? Is bullish at that particular moment. I hope you understand that. All right. So let's quickly move on. Now, the next one is actually bearish candlesticks. Bearish candlesticks. Now, the bearish candlestick is basically the opposite of your bullish candlestick, okay? You say a candlestick is bearish when the close price is lower than the opening price. So, still using our analogy, the other analogy. Now, if the opening session starts with $5, for example, and by the time the session closes, the price has actually gone down to like $2. It means that we have an opening price of $5 and we have a closing price of what? Of $2. Now it means that we are closing lower than we started. Now our candlestick is going to tell us that information, and we can say that that session is what? Is bearish. Now it doesn't matter whether you are working on I mean, whatever chart period, time frame, whatever time frame you are looking at, whether you're looking at 30 minutes time frame, you're looking at 1 hour time frame, you're looking at 4 hour time frame, weekly time frame, it doesn't matter. It's going to tell you exactly what happened within that period of time. Hope you really understand that. So we're going to move on very quickly. All right, so let's move on. Okay. All right, so let's quickly look at this candlestick anatomy. If you can't finish, we're going to continue in the next model. Now look at this. This is the anatomy of a candlestick. All right, the anatomy of a candlestick. All right, so we're going to continue from the next model. Yeah, we're going to continue from here from the next model.